Hello, everybody. So my good friend Amit puts out a tweet earlier today, and the tweet reads, so someone really walk me through it. What's the philosophy of Bitcoin that makes bulls so over the moon? Like seriously, what does this thing do? I'm not a crypto bear. I just want to hear the bull thesis again from multiple perspectives. This video is not a nasty video. This video is a cool video. I respect Amit to the fullest. Really smart dude. And he has fantastic hair. And I'm a little bit jealous. So I'm going to try to answer this tweet as best as I can. Before I answer this tweet, I just want to say there is no right or wrong answer. And in a 10 or 12 minute video that this is gonna take, it's gonna be very hard to condense everything. But I'm gonna do my best. And the premise is this. I'm talking about Bitcoin specifically. So when you guys are gonna say there's better cryptos out there, this is not the debate and this is not the video for that. So just give me some slack when I'm talking about crypto compared to the system that we currently have in the world. In order to understand what system we have right now, and this definitely leads to the reason we have Bitcoin, I just want to give you a brief explanation and a brief history of how things were bought and sold back in the day. The earliest form was called barter system. You have this pen and I have this cup of coffee. You want this cup of coffee and I want your pen. We then do an exchange. This is called the barter system. You can also barter services in exchange for goods. After the barter system, we came out with something called a currency exchange system. You're thinking about currencies. In your mind, you're probably thinking about one of these or maybe some of these. But in reality, forms of currency took different shapes, different forms at different points in time in history throughout different types of civilizations, different types of people, different types of regions, and different types of governments, often changing hands and often changing what type of currency exchange it even is, evolving right before people's eyes. I'll give you an example. At one point in time, seashells was a form of currency exchange. At a different time, glass was a form of currency exchange. There are many different types of currency exchange. The main thing is the currency has to be somewhat scarce and has to be divisible in some way, shape, or form so that you can actually use it. The problem with those currencies is when other people started coming to these locations, the currencies that you were using in your specific geographic location was scarce. However, people coming from other areas were able to reproduce this type of currency. For example, the glass and the seashells, and therefore that currency was not exactly the best type of currency. And throughout history, you used to have these types of different currencies. Around 600 BC, gold was used as a form of currency. I'm going to get into gold in a moment, but it's very important that you understand when gold started to take place. Around the time of 1870s, all the way up to the 1930s, you used to have something called the gold exchange standard, which means at any point in time, you can exchange one of these for the equivalent amount of gold at any point in time, and this was pretty much the world standard. Up until around World War II, we changed this gold exchange standard to something called the gold and dollar exchange standard, or better known as the Bretton Woods Agreement, which means that currency was pegged to a specific value of gold at any point in time. There was literally a term that was used in the United States called as good as gold, because you can always exchange your currency for gold. President Nixon, who was probably the second worst president in the United States, and you know who's the first, declared that there will no longer be a Bretton Woods standard. There was a huge problem where 44 countries in the international community started questioning whether the United States was just printing money or actually kept the gold standard. After World War II, since the United States was the biggest, strongest country of the developed worlds that did not get hit as much because they entered the war a little later, was essentially the reserve banker of the world. When the Bretton Woods agreement got canceled by Nixon, this was the early 1970s, like 1973, we have something called fiat money. And this is what fiat money is. Now, a lot of people use the word fiat, 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 and have no clue what the definition is. Fiat means by decree. Whose decree? By the United States government's decree, or any government that you're from. I'll talk about the US. Now that we understand the history of money, and now we understand that in around 1970s, money is no longer backed by anything at all, let's talk about what happened in the 1970s. During the course of the 1970s, the debt to GDP ratio was approximately 35%. This lasted until around the mid-2000s, going up, but not going up like crazy, and our debt to GDP was around 60%. Mind you, this entire time, our national debt is going up, up, and up. The theory is you're now printing as much money as needed, and there's nothing backing your money, which means you print and increase the debt. The more you print, the more your debt goes up. And this wasn't necessarily a problem until around 2008, 2009. You all know what happened in 2008, 2009. Nearly a global financial collapse. And the only way that we got out of this was a bank bailout. But who bailed out the banks? The United States government. And how did they do this? They printed money out of thin air. By printing money out of thin air, because it's not associated with anything, there's nothing backing this money except the US government saying, this is money, and our national debt went up tremendously, and our inflation started to go up, and now we have our current modern day inflation. Now, in the mid-2000s, our debt to GDP was only 60%. By the end of the 2000s, it was now 80%. And currently in 2022, our debt to GDP is 135%, which means we cannot possibly pay off our debt with the amount of money the United States is making. Pretty crazy statistic that I just said. So now we know the history of money. Now we know how strong money is when it's backed by something, when it's pegged by an actual asset, a scarce asset. And now we know what happens when you depeg it from a scarce asset. You have what the heck is happening right now in the United States. Let's now talk about the properties of gold. And now I'm going to get into cryptocurrency and why it's here, why it was designed, and the bull case scenario for it, as well as what I personally think went wrong. Currently, there's approximately 190,000 tons of gold above ground, with an additional 57 tons or so below ground. That 57 tons below ground is mineable. We mine around 2,500 to 3,000 tons every single year, giving us an inflationary rate to gold of approximately 1.5%. As time goes on, we have better equipment to mine the gold, but the gold becomes more difficult to mine because all the easy mining spaces have already been mined. So now we know why gold is so valuable. It's scarce, there's a finite supply, and there's an understood mine supply of such finite supply. So you can plan for how inflation works, deflation works, and currency properties as well as currency strength if you're pegged to gold. But since you're depegged from gold, it does not matter. Fast forward to cryptocurrency. There's a guy, girl, or group going by the pseudonym called Satoshi Nakamoto. And this group creates something called Bitcoin. And what exactly is Bitcoin? It is a cryptocurrency as we call it. A cryptocurrency is data on a blockchain. What is a blockchain? A blockchain allows you to send information from point A to point B without a central authority. I will give you an example. Currently, if I want to send money from myself to AMIT, I contact Chase. I say, hey, I want to send $100 to AMIT. Chase contacts TD Bank that AMIT banks with. And then TD Bank gives AMIT the $100. Chase and TD then settle up a little bit later, and then you have finality in your accounts later on. And this is all done through an internal ledger book. When it comes to cryptocurrency, you don't need a central entity. The blockchain replaces the central entity. And a blockchain is considered a trusted, trustless system. Why? You're trusting a system that's trustless. You don't know who is verifying your information. And how is the blockchain verified? By something we call miners. What do miners do? Miners mine crypto the same way miners mine gold in a digital format. A bunch of miners have very heavy computers that solve complex mathematical formulas, and the miner that's able to solve that formula the fastest is able to get the mining rewards, also known as Bitcoin. And when the miner gets the Bitcoin, the miner can either hold the Bitcoin, sell the Bitcoin, use the Bitcoin, or put it in the open market. It's just that simple. Very similar to the properties of gold. That's why a lot of times you'll hear Bitcoin is digital gold or Gold 2.0. Bitcoin is scarce. There's only going to be 21 million Bitcoin ever. Every 4 years or so, the rewards that miners gets halved. The total rewards are only going to be out in the ecosystem by 2140. That's when all of the Bitcoin are going to be mined. The reason why it was set up like this is to mimic gold in some way, shape, and form. There is a finite amount of gold. There is a finite amount of Bitcoin. The scarcity of gold can be planned for as you know how much gold is being mined every single year. The scarcity of Bitcoin can be planned for as you know how much Bitcoin is being mined every single year. As time goes on, the mathematical formulas of Bitcoin get more difficult and the computer power needed becomes greater. You can think of this as the same thing that happens with gold. As I said earlier, the easy gold is already mined. So as time goes on, you get better and better equipment, but the difficulty to mine gets increased as well. This is what happens with Bitcoin. As time goes on, the difficulty to mine Bitcoin with your computer goes up, but your computing power, aka your tools or your mining equipment, gets better. This is the direct correlation between gold and Bitcoin. The reason why Bitcoin was invented was because of what happened during the banking collapse. People felt some type of way that big banks were bailed out by the United States government. And because big banks were bailed out by the United States government, whether I agree with it or not, that's not the case. This caused a major problem with our economy as we see it today, because the politicians figured out, hey, you could just print money out of thin air and there's really no amount that we can't print. We're just gonna keep raising the debt ceiling as needed. Why? All politicians are in on it. They're all friends. They're all homies. And at the end of the day, they're all going to vote for each other. They can tell you whatever you want in the public eye, but this is what's happening behind the scenes. And since the big banks are directly the cause of what happened due to their poor decisions with something called mortgage-backed securities, which in very, very simple terms is a bunch of mortgages are put together and sold. Those mortgages are backing some type of financial security or financial offering. So mortgages back some type of financial vehicle. Those mortgages were caca and people were still using them knowing that those mortgages were caca. And ish hit the fan when the real estate market bubbled out and prices of real estate stopped going up. And this is how we had nearly a world economic collapse. Because the bankers are the ones that caused this, and because the government are the ones that bailed them out, Satoshi Nakamoto needed a better way that is free from outside meddling. There is an internal ledger. It's called the blockchain. The blockchain has something called a hash. A hash is what's mined. The hash has very basic information. What was sent, from who was sent, to who was sent, at what time was sent. This is the information on the blocks of a blockchain that connects. I won't go into too much detail of the security of it because that's like 10 other videos. So now we know the history of money. Now we know the importance of a finite supply of money and the importance of pegging actual cash that you can use daily to a finite supply or a finite resource so that there's not mass inflation and crazy debt. And if you don't have this, we know what can possibly happen and what did happen in 2008. And now that's why Bitcoin was created. The whole point of Bitcoin was to stop what happened in 2008 in the future. Because at the end of the day, who bailed out the banks? It was us who bailed out the banks. Our taxpayers' money bailed out the banks. And it caused massive inflation. And within a couple of years, these bankers who literally failed were still making millions, tens of millions, and hundreds of millions of dollars in bonuses. Literally nobody of importance went to jail for this mass crime that nearly killed our entire economic system. There's many use cases for Bitcoin. A couple of use cases for Bitcoin is your money, your wallet, your keys, nobody controls it. Also, nobody gives you any security. Since Bitcoin is immutable, you can't change the ledger. Big banks, big business, you can always take your eraser and erase something that you don't like, which then causes a lot of money laundering and a lot of illegal activities. People think that Bitcoin causes illegal activities and money laundering. However, everything is absolutely traceable on the blockchain. The problem started happening when exchanges started popping up, and instead of DeFi, you have CeFi, central finance instead of decentralized finance, as it was always meant to happen. In today's time, the reason why cryptocurrency, specifically Bitcoin, is no longer acting as a hedge against inflation is because the same people, the same system that Bitcoin was made to change, that Bitcoin was made to fix, infiltrated Bitcoin. And now there's leverage and there's margin and there's trading and there's bots and there's central exchanges. And then there's Celsius Network that is literally a freaking bank acting like it's not a bank, that holding up your transactions and stuff like this. Because of the leverage, because of the margin, that is the reason why cryptocurrency right now is broken. And that is the reason why Bitcoin no longer acts as a hedge against inflation. Unfortunately, Bitcoin is, for lack of better words, infiltrated by big business, and now the governments know how to tax it, and once the government knows how to tax it, they have your hands in your pocket. And I'm not saying that this is a good or bad thing, because at the end of the day, I am a capitalist. I am not a DeFi wins all, and I want the money to go up so that I can have a better life and my kid can have a better life and never have to work in his life. So for that reason, I'm actually glad that there's going to be regulations, because I do think that regulations is what's going to bring the price of crypto up, specifically Bitcoin. There's too many banks, too many hedge funds, too many retirement accounts, and too many politicians that are gung-ho for Bitcoin to fail. But Bitcoin is no longer its own asset class, and you have to look at Bitcoin as what it is. It is now just another tech asset. It is a subclass of a class of asset. It's very interesting what Bitcoin was meant to be, what Bitcoin was, could have been, is, and will be in the future. A couple of actual use cases for Bitcoin, because that was the question, what's so special about Bitcoin, is instant payments, very cheap payments, no remittance, keeping logs of all transactions, any banking system that's free from bankers, or at least this was the intended use cases. Now fast forward to today, and again, I'm just naming a couple of things that Bitcoin was supposed to do, the reason why Bitcoin was so awesome, and there's a lot of other things. Fast forward to today, and you have much better blockchains. You have generation 2 blockchains and generation 3 blockchains. Bitcoin is generation 1. Generation 2 is Ethereum. Just think about it as you can scale up and you can build vertically instead of just horizontally. And now you have these generation 3 blockchains that are popping up that have amazing technology, that are able to do as much or not more transactions per second as Visa, MasterCard, Amex, or all of them combined. Cheaper to use than all of them combined, where transactions are at a fraction of a penny. And they have a much better way of proving the blockchain. Instead of using old school miner technology, they use something called staking, or versions of staking that are extremely energy efficient. Elon Musk himself would be proud. Not to mention the technology keeps getting better and better, and you could literally build a banking system on top of blockchains. Again, I'm not going to get into that because that's 50 different videos in itself, but you get the gist of it. The point is to answer in a very easy, clear, coherent, and direct statement. The reason why Bitcoin is Bitcoin to the moon or Bitcoin has such a bull case scenario is because Bitcoin was supposed to be everything gold was supposed to be, but better. Not only does it have a finite supply, not only does it have a certain amount that's put out into the economy at a certain rate, it is also divisible and easily usable. You see, with gold, you're not going to walk around with gold bullion. You're not going to walk around with a brick of gold. And the transaction is instantaneous. If you give somebody gold and it's a large amount, you need somebody to transfer that gold. With Bitcoin, that's not the case. And you could literally transfer millions and billions of dollars worth of Bitcoin instantly in just a couple of minutes with pretty decent finality and pretty decent fees, especially compared to the commercial options that we have right now with centralized banking. Unfortunately, we are where we are, and the intentions of Bitcoin is no longer what it used to be, but it's ever evolving, like the history of money that I gave you earlier in this video. And I'm looking forward to see what's going to happen. I don't think that Bitcoin is dead. I think Bitcoin is definitely going to recover for different reasons than it was originally intended for, and for the reasons I mentioned earlier, that now big business has its tentacles in cryptocurrency, and now cryptocurrency is the new banks. It's too big to fail. Amit, I hope this video was clear. I hope it made some sense for you. And it's very hard to jam-pack so much information into one video. 100% respect, my brother, and yeah, I'll see you later.